Thinking of investing, working, or starting a business in the cannabis industry? We've got you covered right here on Plant Problems. Hosted by Tony Frischknecht, Plant Problems takes a different approach to cannabis than what you're seeing and hearing from the mainstream media. Come along with Tony and be in the know about how to invest, work, or start a cannabis business. Let's get the show started with your host, Tony Frischknecht.
Hey everybody, welcome to Plant Problems. I look forward to sharing my next guest with you. His name is Scott Jordan. He is founder of Alternative Finance Network, providing access to funding for cannabis companies. Since 2009, he has been a pioneer in providing loans and equipment leases for cannabis companies and has been called the Marijuana Money Man by Fox San Francisco and the Denver Post. He created one of the first companies to provide access to debt-based capital, dynamic alternative finance, in 2014 and arranged over $30 million in funding. He has taken his existing private capital source and created an alternative funding network for cannabis business owners seeking funding for equipment, working capital, real estate, accounts receivable, and project financing, while helping entrepreneurs expand their businesses and keep their remaining equity. Scott has a keen sense of timing and has been at the forefront of 3 other business evolutions. Having held key sales management positions in the telecommunications industry with long-distance provider MCI, local exchange carrier ICG, and the first voice-over-the-internet international wholesale carrier ITXC. Scott is a commercial finance expert known throughout the marijuana industry and has been interviewed by local TV and radio stations, authored articles, and been a featured speaker at national conferences. Hey, good afternoon, Scott Jordan. How are you doing today?
I'm doing great. How are you, Anthony?
I'm doing awesome. It's another day in paradise, right? Friday afternoon.
Friday afternoon on a short week. You can't beat that, man.
Yeah. For listeners out there, so this is after Labor Day, so I'm catching up with Scott. And you know what, Scott? I'd like to find out what transitioned you into the cannabis finance industry. What story do you have behind that? Everybody has one, so I wanted to see what yours is.
Sure. Back in 2009, the dispensary that I was a patient at was complaining to me that not only was he having a hard time getting a bank account, but he wasn't getting any sort of lending or any sort of funding availability to him. And I decided to take it on as a challenge. And I thought, well, I've helped other hard industries, get financing. Why not cannabis? And I found it was more difficult than I thought, but prevail. And I did end up getting him a loan. And that was back in 2009, back when you were changing bank accounts every week and had to actually pick up cash from this guy every Friday to make sure that the lender got paid. But we got it done. And then in 2014, when we went adult use legalized here in Colorado, I saw there was a tremendous opportunity, and I really like helping out the underdog. My grandmother used to tell me, help out the underdog and life will be good for you. And so I really enjoyed that and decided that I was going to help marijuana business owners find funding sources that were reluctant to come out into the light of day, but wanted to be involved in the industry, wanted to be leaders in the industry, just didn't want to put feet on the street and wave a big red flag for the government or other officials to give them a hard time.
So, Scott, you touched on back in, there was banking. So for a lot of our listeners out there, especially in the newer markets, explaining to them really how difficult banking was back then. I know they may think it's tough now, but maybe if you could go into that a little bit more. It sounds like you're pretty familiar with it.
Sure. So before Sunday Seafried came along, who is the president of Partners Colorado, the credit union that has probably 80% of the market share here in Colorado, there was only a few credit unions and very small local banks that would even allow a marijuana customer to come into their bank. It was very, very bad. Everybody was hiding their banking accounts. the banks didn't know what to do to comply with FinCEN and the Cole memo. And so most of them just took the approach of, hey, I'm not going to go ahead and alienate my regulators here. I'm just going to go ahead and, when I find a marijuana account, I go ahead and close it. Well, Sunday Seafried at Partners decided to take that on as a challenge, and she decided to bank as compliantly as possible within the rules that were set up at the time and then adjust at the time, and was the first credit union to really stick their hand up and say, we're going to go ahead and bank the industry, and we're going to do it as legally and compliantly as possible. And thank goodness for her, because she kind of spawned many other children and stepchildren of her idea to bank cannabis businesses. And, without her, it would be a much more difficult road for business owners to be able to get accounts. And as you know, Anthony, it's a nightmare trying to run a business where it's all in cash. You got to pay your employees in cash, which I heard is not even legal to do that, because you've got to have some kind of record of withholding and the other things. I mean, it's just ludicrous to try to run a business like that.
For those of you out there thinking it's tough, we actually ended up, if anybody's heard my story, I ran a couple dispensaries for several years. And there was a point where we were actually paying our employees in cash. Me and my other business partners would take the money out of the safe for our payroll. And our payroll every 2 weeks was about $100,000. It was pretty small. It was a lot of work. You basically had to, we had us 4 owners out there counting cash over and over and over again to make sure we were giving everybody the right money. Then we had to put it into our accounting, into our QuickBooks, and then print out a sheet, deliver all the payments by hand to each one of the employees. Each one of the employees we'd have them sign off that they received their full paycheck and the amounts were correct. And then after that, we had to go file that again. So every 2 weeks we were doing this. And Scott brought up what people were, this was really happening before there was any credit union willing to bank us. And as far as I know, Scott, there's still only a few credit unions in the state that are doing that. Is that correct? And are you familiar with the ones that are doing it? And is there new ones on?
There are only a few banks that I know of that actually are doing it, or at least, raising their hand and disclosure, so that you're not spreading out, who is doing it, because they're afraid of getting flooded by new applicants, and they just, they can't handle it. Almost all of them have waiting lists. And even for ancillary accounts, which you would think would be easy, it's not for the cannabis business owner. So,
yeah, you mentioned the waiting list. I actually had sold a business, closed the account, came back 2 weeks later and said, "Hey, can you guys sign me up on an account?" And they told me that I had to get on the list.
Yeah,
I was blown away. Yeah. I was like, "Are you serious?" And they said, "Yeah, we've got hundreds of people on this list, and when it opens up, we allow it." And so I was nothing special, even though I banked with them for several years, which was very interesting to me, because I still had some other accounts in there. Speaking of, what do you know about the Safe Banking Act, and how do you see things progressing right now? Because it's definitely something that's been really pushed on the entire year, but I'm not sure if it's going to get moving forward at this point. Do you have any feedback on that?
From what I hear, it's hung up in our government bureaucracy there, and it's going to be tied to some other type of legislative action. And so most of the insiders are not optimistic that it's going to get done before the presidential election, which is a year and a half away or so, or a little bit more than a year away. So it's going to be a while, I think, but it'll be a step in the right direction. What's been happening, though, is quietly more and more banks and credit unions have figured out how to be compliant and are quietly banking the industry. And almost every state has more than one available choice for banking.
Okay. I think this is probably some good info for the business owner, the soon-to-be business owner. What kind of fees are involved within a banking cannabis, and what have you seen in requirements for?
It varies so much. It's unbelievable. I was talking to an Oregon business owner. They pay $200 a month flat rate, no fees for deposits, and they think it's expensive. And I see it all the way up to, $1,000 a month for an account and 1.5% of your deposits, and electronic deposits may be reduced or investor money may be reduced. But it's really all over the place. And really because of the presentation that Sunday Trina did recently, where they have 21 bankers that are covering their 400 some odd accounts that they have. And that's a lot of women power, that you need to do that. Figure that, probably they're making 65 to maybe 85,000. I don't know exactly, but you're looking at $1.5 million at 75 grand a piece. It's a lot of, that's a lot of money that has to go in to just cover that portion of the overhead, let alone filing SARs and the other reports. So it's
why do they need so many people for?
Because they watch every transaction that goes in and out of the account, every transaction, any transaction that looks suspicious, they flag. Because what I didn't know was the bankers are personally liable and personally responsible for any money laundering or anything that goes on their account. And the credit union cannot pay for it through insurance or other means. So they have to be hyper vigilant. And then if they were convicted of money laundering or doing something, they're going to be banned from banking for the rest of their life. So now all of a sudden they've got to find a new way in order to make a living. That's a really big penalty. The Wall Street firms, don't have that kind of draconian penalty. Goldman or any of the investment banks, they'll pay the fine and, you'll just keep on moving. But, again, you're not at the 7 and 8 figure income in this side of the industry either.
Yeah. So you see that when legalization happens, I think a lot of us that are around the industry understands that it's going to happen. We don't know quite when. But how will that change the lending parameters, or how will that change business for guys like you and the smaller lending guys? Well, is this better for you? Is this worse? How do you see that kind of shaking out?
Well, it's going to be large players with inexpensive money coming into the industry. They're actually coming in now quietly. What's happening is there's one major bank that's in Arizona, Nevada, California that is quietly doing real estate loans and taking deposits for the largest of the large accounts. And then Sunday Seafried has started an affiliate program where she's bringing on credit unions in other states where they're doing kind of the back office vetting and some of the other work. And then the bank in that particular state is taking the deposits and being sort of the front end. And then you've got several other companies that are doing it privately, a company called Dama Financial, and other people are doing it and advertising it. So it's getting, easier and easier. You're getting more choices. In terms of the lending, I think what it'll be someone that will have a tolerance for risk and will want to bank those accounts as well, because the challenge that you have in this industry is it's so new, you don't have a lot of history, and the accounts that you're dealing with a lot of times are either public companies that are losing money but have raised a lot of money, or companies where you really need to have an equity upside for the lender to take into consideration the fact that that company is not performing according to how they would like to ideally underwrite clients. Meaning a bank, a real lender wants to see that you're making money so that you can repay them. That's really the genesis of lending is, people ask me all the time, so, who qualifies? How do you know who qualifies? I say it's a real simple thing. There's only two paths in lending. One is, do you qualify based on your current cash flow? Will the new payment that you're going to incur be less than the profits that you're making on a monthly basis by hopefully at least, if you're borrowing and repaying back $1, you want to be having a profit of at least $1.25 to $1.50 in order to be able to make that new payment. If you're buying equipment or a building and you can put down a substantial down payment, generally 30% or more, you can borrow from hard money equipment lenders and hard money real estate lenders because they will have enough equity in the property if they have to take it back and if it's the right type of real estate or equipment. So recently we've had, I think in about the last year or so, a number of equipment lenders that will lend based on the type of equipment. So for instance, they will not lend on life, but they will lend on extraction machines, on packaging, on other assets that command value at an auction. And that's how they're lending it. They're not lending it based on the cash flow of the business. It's higher risk lending because even if you're into, something with a 30% down payment, you still have to foreclose on it, get the equipment, ship it back, endure the time before it sells, go through the auction and selling process. So you've got a number of different expenses in addition to the legal to repossess it, if you can repossess it, because, unlike a building, equipment can move and may be damaged. It may not get what you thought it was going to get when you appraised it. So it's another option. It's more expensive because it's higher risk, but it is out there. And oftentimes it's better to do that than to give up equity at the early stages of your business when your valuation is going to be least. And you probably found that out, with what you ended up doing with OPEN.
Yeah. So what you're finding is the new thing right now, what I'm starting to see, at least on the financing side and the, especially with everybody going IPO right now and stuff, is how does the business owner navigate, well, should I sell a part of my equity for, somebody bigger with money to come in, or should I do this on my own, right? Go work with a smaller financing company. How do you recommend, the small business owner and the startup guy, work through that process? And I know it's probably deep, but I think it's worth discussing.
Sure. So I suggest that people use debt as long as they can to get the valuation as high as they can. If their ultimate goal is to sell out for a large number or be acquired. Debt is always going to be your way to provide capital both from an application and an answer standpoint, but more importantly, the personalities that are involved. I mean, I've heard so many horror stories about partners, particularly in Denver, when we were going through those shotgun marriages, but it was 11 and 20, and that you had to be vertically integrated, and all of the growers all of a sudden had to meet retailers, and the retailers had to meet, growers out here in Colorado because of the MED rule change.
Yeah.
So a bad partner is worse than a bad spouse because they're going to run for the hills and try to extract as much money and as much concessions as possible. And so with a debt-based lender, it's sort of like dating, whereas an equity-based lender is more like a marriage. And, if it's not going to work out, I'd rather have a one-date blunder than a marriage that drags on, that, you've got to spend a lot of money in order to get, an expensive divorce and, move on with your life.
Hey, so Scott, so with that said, share a story with us, a bad one that you're like, wow, I can't believe this really happened, because they're all over the board. But in the newer markets, I want you guys to listen to this, because what Scott's going to share with you will definitely help you keep your eyes and ears open as you're looking for business partners or equity partners. So, Scott, do you have one that you wouldn't mind sharing?
Sure. I'm going to leave it remain nameless, but I was dealing with two partners there. One owned the building and one had the expertise to grow. So you figure, okay, hey, that's a good start here. Well, the one that owned the building was wealthier than the grower, of course, and the building owner thought he knew more than the grower with these new LED lights, and he wanted to experiment with them. And the old school growers said, no, they're not ready for prime time yet. Well, the grower went away for a holiday weekend and ended up getting locked out of the building that was growing and lost a crop because the new owner said, "Moving my own grower in here, the hell with you." There's a lot of money in legal fees. I don't know, end up knowing what happened, but it was not very pleasant. And when he called me, it was like, yeah, I'm never going in with a partner again. It's the worst idea I ever had. I'm going to own my own stuff, and that's going to be it.
So with that said, you probably caught him at a really bad time. It had just happened. So
yeah,
I'm pretty familiar with situations because I've seen several, and partners are good. But if anybody out there is looking into partnerships, you really have to vet your partners well to understand who they are, and what they bring to the table. Because like Scott had just mentioned, if you're able to date ahead of time and not go all in with somebody and really understand how they work, a lot of times you have a better relationship in the future. So that's what I've seen anyway.
Yep, I agree.
I was just wondering, you've got a lot of growth happening now, and you've got legalization talk always happening. If you had a crystal ball and you were able to say, okay, when do I see legalization happening, and what would probably push it over the mark and really actually happen in Washington? Can you give us a little insight on what you think and why?
We're gradually moving there kind of state by state. And I think what's going to happen is they're going to go ahead, and I think possibly at this election, certainly I think quickly thereafter, depending again on how our economy reacts over the next 12 or 13 months and what sort of actions Trump is going to take in terms of trying to portray, a healthy economy so that he presumably gets reelected. I think what will happen is the states will have the choice of going legal or not. I think most of them will choose to take the tax revenues and not have their, neighbor states, receive the bulk of that. And so I think you'll see late 2020 or certainly by 2021, 22, things will be legal all over the place.
So, and some people would, of course, say, "Oh, you're crazy. It's not going to be legal for another 5 or 10 years." And
I've been told worse before. I just think that you look at the tide. I mean, Illinois did it legislatively. States are going to say, "Whoa, we can just do it legislatively and raise all of this tax money." What are we waiting for? We haven't seen the harm. We haven't seen Colorado or Washington come unglued. Let's go ahead and bring it on. And it creates jobs. I mean, it's really a dual win. It creates good paying jobs. The real estate values go up. So you bring in new tax revenue, and hopefully you, if not reduce greatly, at least reduce somewhat, the black market for, marijuana sales.
Absolutely. So in the new markets, let me ask you something. If you were in a new market and you were going to explore starting a business in cannabis, what would you tell the new business owner, the number one thing you would tell him when he's working, when he's looking into financing or looking at partners?
Don't run out of money, okay? Don't get halfway over the bridge and realize everything is going to cost at least twice as much as you think, sometimes more, and take at least twice as long. There is no shortcut. You're in it for the long haul. Now, you may get bought out sooner, but you're in it for the long haul, and, plan on that.
So it's not a get rich quick is what you're saying?
No, not at all. Not at all. Not at this point in time. No. Nope.
But if you look at the media, it tends to kind of tell you different. Do you way or am I way off base here?
The media likes to glamorize and sensationalize, anything. And, that's the only way they can possibly get your attention in all of the noise that, proliferates as news here. So, if it's not breaking headline and, somebody getting shot Trump sending out some tweet that's ill-advised, it doesn't get your attention. And so you've got to do, something to be spectacular and flamboyant. And I think also the early marijuana films, that came out, the early, kind of reality play, the one with the Breckenridge Brewery. I remember that one, where they were only dealing in cash. So, that night they had a huge sales number, whatever it was, 50,000, 100,000. And they're, literally taking the 20s and throwing it up on a bed. I mean, it makes for great TV, but every dollar that landed on that bed had to go out to pay taxes, because the ownership at the retail level pays, 70, 80% of the revenues out as taxes because they're unable to deduct normal SG&A and other types of expenses because they're dealing in a controlled substance. So
that's not talked about very often either. I want people to really, if anybody's out there exploring what business to get into in the cannabis side, be well aware of the tax implications before you jump in, because it will definitely change the direction you're steering the ship, right?
Absolutely. I mean, many people had to sell their business when it came time to pay the tax man because they hadn't allocated for the substantial reduction in deductible business expenses and therefore the huge amount of taxes that are owed based on 280E.
Yeah, and you guys, I'm going to, we'll get into some 280E depths so people really understand what 280 is and how it works, because there is some, it's a very tricky one. I don't want to go too far into it because it's multiple shows when you start breaking it down. But Scott, I really wanted to thank you for joining us today. And if people want to talk to you about some more financing, how can they get in touch with you and where can they contact you at?
Sure. My email is sjordan, finnet.com, which is the first three letters of alternativefinancenetwork.com, or you could spell it out. But that's my email address, and would love to talk to any of you about financing needs. It's become more and more available, open. We're seeing more and more choices of financing available. So,
can you share that email address again, please?
Sure. It's sjordan at altfinnet.com, altfinnet.com.
Great.
And or reach out to me on LinkedIn, Scott Jordan, Jordan.
Perfect. Well, Scott, it was a pleasure having you here today, and I appreciate you taking time out of your Friday afternoon and giving some people some solid knowledge that are starting their businesses and moving forward. So thank you so much.
Thank you so much, and thanks for the good work that you're doing, educating people out there. I think it's a great thing to do, and would love to help in any way that I can. Education enables people to become empowered, and when you're empowered, you've got strength instead of weakness, and that's what I want to be able to help people do.
All right, great. Well, we will talk to you at some time down the road.
Thank you,
Scott.
Thank you. Take care. Bye-bye.
You've just listened to another insightful episode of Plant Problems. If you like what you heard so far, don't forget to tell your friends and colleagues. For additional resources or to leave a review, head over to plantproblem.com. Join us again next week on Plant Problems with Tony Frischknecht. We look forward to having conversations with you as we go along this journey.